Our trade on Tesla has now made more than 300% profit, but we found new unusual options worth $241 million being traded on the last trading day, November 8th, as Tesla stock hit a new high. And so many of our subscribers are asking us, is it time to sell and close the trade to take profits? Or is this still a good time to buy Tesla stock? And so in this video, we will answer this question by analyzing this $241 million trade to find out if this wealthy investor is buying or selling. And then we will show our new strategy on how we managed our current trade on Tesla, which we started on September 6th, on this day when the stock dropped with the big red candle. And so many people were panicking. Now, if you've been following our channel, you know that we shared our most recent trade on Tesla after analyzing those unusual options worth $95.8 million on September 6th, about 2 months ago in this video. So if you missed it, we'll put a link at the top here. Make sure to subscribe and hit the bell icon so you don't miss out on these very profitable opportunities. Because in this video, we found that this wealthy investor was bullish, and that is why we bought Tesla stock. And you can see that it never dropped below that price level. And so if you bought the stock ever since then, you can see that it has now gone up about 56%. But if you bought options like how we did, you can see here that those options that we analyzed at the 225 strike calls expiring December 20, where we paid $2,295, we now have a profit of $7,593. So very profitable. And why is it so profitable? Well, you can take a look at the option chain now for these December 20 options at the 225 strike calls. Right over here, you can see that we still have some of the contracts in the same position, but we started to trim our position because these call options are very deep in the money by about $100 since the stock is trading at $321 a share and the strike price is at $225. And so you can see here that they are now worth between $9,800 to $9,930. So we can sell it back to the market for this $7,593 of profit. And so if we calculate a profit percentage of the $7,593 of profit divided by the cost of the trade of $2,295 here, and then multiply by 100 for a percentage, you can see that we've made 330% profit so far on this trade. So this is another real example proving how we keep winning with our data analysis. So if you're sick and tired of losing consistently, witnessing losses after losses, or perhaps you're not losing, but you're not making as much as you would like, then go to our website. We'll put a link at the top here where you can gain access to secret trades made by wealthy investors with a higher chance of profit. Because keep in mind, not all of these unusual trades will be profitable. Some of them will be losers, but as long as we diversify our portfolio with higher quality stock picks based on this type of data analysis, then we can become more profitable in the long term. Now let's take a look at the new data on how this $241 million investor is trading Tesla now. We can see here from the options time and sales tape that on November 8th, we had these February 21st options at the 290 strike calls. But notice that there are multiple trades happening at this same time for another strike price, the 240 strike calls, also expiring February 21st, all happening at 12:40 at the 8-second mark. You can see here multiple trades happening for these options. So let's take a deeper look at the option chain to find out what this wealthy investor is doing. So we can see here on the option chain, these February 21st options at the 240 strike calls here, there's an open interest of 42,000 contracts, which is greater than the volume being traded. And so based on our analysis, they were closing out of these options to take profits and rolling to a higher strike price at the 290 strike calls. Notice the volume much greater than the open interest of just 2,740. And so we know that these are the new opening trades. And so we can calculate the total trade cost now that we know which were the opening trades here. We can see here that these closing trades over here, we need to take a look at these February 21st options at the 290 strike calls, multiple trades happening here, and we need to add these up. So we can see here that there was 35,200 contracts plus 4,400 plus another 4,400 for a total of 44,000 contracts. And we can see the price that they paid here, $54.96. We need to multiply by 100 because each option represents 100 shares of stock. And so by multiplying by 100, this is $5,496 per call option. And so we multiply by 5,496 and we get a total trade that costs $241 million. And so were they buying or selling these options? Well, if we take a look at the option chain here, you can see that we are also in this position as well. Over here, POS stands for position and green means buy, because based on our analysis, they were buying these 290 strike calls for the 54.96 as we had just calculated. And when we analyze this trade, you can see here that this is also a bullish long trade as the share price goes up, which is represented on the x-axis here on this graph. These options become more positive, which is more gain, profitable. And if it goes down, it becomes more negative, which is more loss. Because on the y-axis here, it shows the profit loss. Note the zero break even, so anything below that is a negative loss. And so we can confirm that this is a bullish long trade also because we can see here on the Greeks, we have a positive delta trade. But notice the risk here, a very negative theta of 18.14. So this is very high risk. And so these options will decay in value through time, which is why this purple line starts to move down lower. The blue line represents the date at expiration, and the purple line represents the current date. And so keep that in mind. And so the way we managed our trade was we essentially started to roll some of our contracts from the December 20 options at the 225 strike calls to the February 21st options at the 290 strike calls. What we did was we closed out some of these trades, locking in profits, because as you recall, we had $7,593 of profit from this trade. We closed these out. We used that profit to buy into these new options, which means that this new trade of $5,496 of debit is less than the profit that we made from our previous trade that we rolled from. We need to calculate that in of $7,593 of profit. And so our new trade is actually a credit trade of $2,097. And so our trade is 2097, which means that we've locked in profits of $2,097. If the stock goes down, you can see there is no negative loss at all. And if the stock continues to go up, we can continue to make more profits because the new trade costs less than the amount of profits we made from our previous trade. And so we are now in a no-loss trade. And we are only doing this because we've made so much profits from our previous trade. If we did not actually make profits, our trade would actually be very different. We would have set up a different strategy to reduce our risk. If you want to learn more about our strategies, make sure to go to our website. We'll put a link at the top here. And make sure to watch our previous video analysis on Tesla. You can learn a lot from hindsight on how we were able to become so profitable on this trade. Let us know in the comments below, do you think Tesla will continue to go higher or will it crash back down? As usual, please smash the like button, subscribe if you haven't. Take care and have a wonderful day.